So of course I'm freaked out about my root soccer now, so.
I'm gonna say, how do I move?
Right, for this trip, as we normally zoom in. We are at 1 o'clock, sir.
Well, we're not, it's not anything we vote on.
He's talking about
Yeah. Reappointment.
reappointment window.
It needs.
Oh,
to the
they
chair of the
contacted me.
commission.
The, what's her name?
Article, I don't know.
Lisa's already, okay, so they're already doing it.
Yeah, but-
So I knew.
You just, yeah, re-unmuted?
Nope, yeah, you're ready to go.
Let's go. Hey, welcome to the Children's Services Council of Leon County's Finance and Budget Committee meeting. It is 1 o'clock and I am calling this meeting to order. Ms. McPhail, would you be so kind as to call roll?
Councilmember Richards.
Here.
Councilmember Johnson.
Here.
Superintendent Hannah. Chairman Jones. Mr. Mitchell.
Here.
You have a quorum.
We have a quorum and with that, we'll move to item 3, which is the approval of the agenda.
Motion to approve.
And the motion, second, without objection, show the agenda approved. Item 4 is general public comment. Ms. McPhail, is there anyone from the public who'd like to speak?
There is no public comment.
Very nice. That moves us to, I think, the most important reason we're here, and that is the presentation by Purvis Gray and Company of our fiscal year 24-25 audit results.
All right. Well, good afternoon, everyone. I'm Brian Tucker. I'm a partner with Purvis Gray. I have Daniel Sturmer with me. He's a CPA. He's the in charge on the engagement. You'll hear from him. He's going to walk us through some of our slides he put together to summarize the results of our audit. Overall, the audit went very well. I don't know if you've had a chance to look at it, but these are one of the cleaner reports that we will issue. We are very pleased with the results, and we want to thank Sika and Dina and John, the whole accounting group, for their cooperation during the course of our audit, getting us everything we needed to complete our audit. So thank you to you all and great job. Daniel's going to kind of walk us through some of the highlights of the report.
Hi, everyone. Slides up there. Okay, so if you want to follow along in your copy of your financials there, I'll occasionally reference a page number, but most everything should be up on the PowerPoint slides just to minimize the amount of turning back and forth everyone has to do. But if you want to turn to page 1, that's where the audit opinion is. And that's we give an unmodified opinion. That's the highest level of assurance you can get from a CPA firm. So no modifications of opinion there. We also have on this slide, you'll see 3 other reports mentioned. Those are on the very back of the financials. You don't have to flip to them right now, but those are on pages starting on page 31. And those are just kind of required reports that we have to issue for the audit. And I'll just hit the high points for each one of those. So we have the report on the internal control and compliance, and in that there was no control findings, no compliance findings. If there were significant deficiency or material weakness, it would go there. But there was nothing to report. We also have a report on the compliance with Florida Statute 218-415. That's just how you handle your deposits and investments. And there are no issues with that. Everything is state approved for the investments, especially so in the cash. And finally, on the management letter, if we had any sort of comments to provide to management, we might put them here. But again, there's nothing to report here. There are a couple of disclosures that are unaudited, just related to the ad valorem tax funding and other miscellaneous things that you can look at, but nothing to report there either. So next slide. Okay, so we'll start with this, the communications with those charged with governance. That is a letter directly to you, the board. And this is sort of another sort of hodgepodge of items that we're required to report to you. There are also no findings or any recommendations in this, although I'll bring your attention to just a couple things. We did implement several accounting standards this year. So number one was the GASB number 101, the compensated absences. And that's just changes how you measure all of this accrued leave and sick that you report on the financial statements. So it did change the liability a little bit, but not materially. And so that's implemented. That was a little more time consuming, but that's be a lot easier going forward. And there was another statement, GASB 102, risk disclosures, and that did not apply to Service Council. There are a couple of estimates, important estimates. So probably the biggest one on the financials would be the net pension liability associated with FRS. And so that's completely out of your control. And, we just have to report your share of that unfunded, pension liability that the state recognizes. And so kind of gets allocated to every governmental or every agency that participates in FRS. Nothing with the disclosures. We'll go to the next slide. No difficulties encountered in the audit. Thank you, everyone. Once again, I echo Ryan. Appreciate all y'all's help. A pleasure to work with. No issues. We did have just a handful of adjustments, pretty standard for the balance sheet accounts, and me and John talk about that every year. No disagreements with management. Next slide. We did receive a management representation letter to kind of, we relied on the representations made by management in this letter. We received that at the end of the audit. We're not aware of any other consultations with other accountants. And there are a couple of, well, three actually coming up in the next 2 years, auditing standards, governmental auditing standards. We're just coming down the pipeline. None of these should have much effect. There'll be some minor things here and there. But next year we have GASB 103 and 104. 103 just kind of changes the presentation of the financials a little bit, particularly in the management discussion and analysis. And the budget to actual schedule will be a little more detailed. They'll have more comments about variances and things like that. We've been talking with management about this, and they know all about it, and there'll be no problem to implement that next year. And GASB 104 should not apply at all, but we're going to take a look at it and make sure. 105 is coming out fiscal year 27, and that just kind of nails down which kind of subsequent events you report in the financial statements. They just kind of want to clarify because there's been some confusion with governmental reporting about certain things like debt issuances, which would not apply to the Children's Services Council. But that's it for the governance letter. We can move on to the actual financial results now. So on the next slide, if you want to follow along, this will be on page 10 of your financials. And this is the government-wide income statement. So as you know, we present two different balance sheets and two different income statements. And so the government-wide income statement and balance sheet presents all the long-term kind of accruals that we leave off of the fund statements, which are more short-term focused. So this is the income statement on the government-wide level. And it's generally pretty simple for y'all. You have the ad valorem taxes, which you know all about. You have your interest income as well. And then we do compare results year to year. So you'll see that the program expenses, and that's all the funding you give to the organizations, has increased by about 900,000 year over year. And the administration expenses, which is a lot of your operating and payroll and stuff, has increased a little bit as well. You can go to the next slide. This will be page 9. you want to follow along. This is a governmental wide balance sheet. You'll see a comparison year over year here too. So the difference in assets is mostly just due to the increase in cash and investments year over year.
Can I just stop you? We went from 10 to 9? Or-
Yeah, we did the income
Okay.
statement first and then the balance sheet's the previous page.
But is that what I?
That's a summarized,
Okay.
that is a summarized form. Yeah.
Very nice. I thought.
So yeah, you can see the totals agree and it kind of breaks it out here a little more. But the current assets are basically everything except fixed assets. So that'll just be all your cash investments, your receivables. You have some grants paid in advance. So you have about $1 million that you have paid out to organizations that they have not fulfilled the requirements for being reimbursed yet. So that was just outstanding as of year end, $1 million or so. And then on your liability side, you really don't have many short-term liabilities at all. But there are some long-term liabilities for the government-wide balance sheet we have to put on there. That mostly has to do with the net pension liability from FRS and all of the leases we've booked over the years for the building, some equipment as well. And those all go on here as well. And that's the bulk of your liabilities. You do have some current liabilities of accounts payable and accrued payroll, but compared to your current assets, it's very small in comparison. All right, we can go to the next page. Okay, here is the fund level balance sheet. This takes away all of those the income statement. This takes away all those long-term kind of incomes and expenses that we put on the government wide. And so year over year, you see your ad valorem and your interest went up, which is to be expected. And you did have 930,000 difference in grant awards paid out. So more grant activity and a little more on the operating side as well, like you saw. So the debt service may be a little confusing at first because you don't have any long-term debt. You don't have any notes or bonds or anything like that. The debt service is required under governmental accounting rules to record the payments for your leases. We split them up into principal and interest each year and report them under debt service. So those are all the total payments for all of your, your rent and et cetera.
Daniel, I'm trying to, I can't see that.
Okay.
But from the grant amount, if I heard you correctly, the increase from one fiscal year to the most recent end, so 25-26, 24-25 to 25-26.
Yes.
No. Yes,
Gotcha.
thank you, is 900 and something thousand. So, and then the increase in administration costs. Where is that? Like, is that here?
Well, yeah, so for this presentation, we're showing comparative totals year over year.
Right.
But we only present 1 year here, so.
Okay, so, well, just for I'll be doing your presentation, so I want to,
Right.
if I can get a copy of that.
Oh,
Like,
absolutely.
can you tell me what it is, what the dollar amount is?
Yeah, so right there under, it's hard to see right there. So we classify it between, on the fund level income statement between program
I have it big here,
and in administration. Okay, so.
that you can see.
So the program is all of those associated with the funding you give to organizations, and the administration is basically everything else, a lot of payroll and operating expenses that you have. And so you'll see the difference there of about probably net of about 131,000 or so.
Got
it.
Thanks.
Okay.
So before you leave, just know that I need a copy.
Yeah.
We already have,
Yeah.
Yeah.
we have, we're presenting it.
Oh,
Awesome.
So we'll send it.
okay. So,
Yep. Okay.
Okay.
oh, yes.
I don't know, when would you prefer questions?
Whatever you'd like.
I
Yeah.
just had a question because we've over the last probably 3 years, we've scaled the amount of program awards that we have. And I just didn't know from a best practice if there's ever a time when you split any of the personnel services costs for staffing that are completely dedicated to program monitoring, evaluation, procurement, all that stuff, where you would allocate some portion of those. I've let my CPA license lapse at the end of the year, but I had it for about 40 years. And I'm just trying to get caught up to say, yeah, I get where these costs are and how we're reporting them, but is it ever appropriate for us to take any of those currently administrative costs to the extent that they're specifically and exclusively or could be allocated to program awards to better present what true administrative or overhead costs are for the council? I'm not asking for a reissue if the answer is yes, but it's something I just want to think about.
Yeah, absolutely. I mean, that's something we could work with management. We'd have to estimate. We'd have to come up with some sort of estimate and.
Yeah, it's not a today thing. It's not this fiscal year thing, and it would need to probably be discussed further than we have time to today. But it just seems to me that we've scaled and we haven't changed our reporting on it.
Help me understand.
So to me, you can present it both ways. You can say direct program funding, and especially as simplistic as CSC is, you've got a large chunk of grants, and how much does it cost you to administer those grants? And that is currently how it's reported. The way Mr. Johnson is suggesting, which is, you're right, is there at DCF, at DOE, where they get federal funds, they can assign a portion of their cost so that they are reimbursed by the federal government or an outside entity. And so that's where you would say a portion of Dina's salary, instead of it going under administrative costs, would be assigned to the programs that she monitors.
Yeah, and there's other staff too, right?
Yeah, I just
more program monitoring and yeah. Yeah. Thank you.
Thank you. We can go to the next slide. This is the fund level balance sheet. So this will be on page 11, moving back a little bit. And for your information, there are reconciliations between the two balance sheets and two income statements in there if you'd like to see why it is different. But here we see mostly the same stuff. Maybe the different part you would see is the fund balance. Well, first you'd see much less liabilities because we don't book all those long-term liabilities here. So a small amount of liabilities, and we do classify them in fund balance, basically the equities section. First, you'll see non-spendable, which are those prepaid sort of expenses, the grants paid in advance. And you also have a policy at the CSC to assign a certain amount to catastrophes and contingencies. And so that money is reflected there at that 874,000. And the rest is unassigned. Means you can use it for whatever. Next slide, please. Okay. This is a budget to actual, and this is actually all the way past the notes. So you'd have to turn to page 28. You'd like to look at this. 28, and that's this is we compared the original, final, and actual amounts. And so there were no budget findings. So if there were a budget finding, that means you would overspend your budget. And you see there on the total expenditures line of about 6.78 million. You did not overspend. You budgeted about 9.1 billion. And so next year, this will look a little different. We'll have various explanations between original and final to actual. Kind of explaining, why there are differences. But for now, you just have to present it like this, and the only really relevant finding would be overspending the budget, and that didn't happen. So we'll go to the next slide, please. And these are the notes. So the notes start on page 15. And I'll bring your attention to a couple of the more important ones. So note one is just a lot of accounting policy type things that you can read more about, just items in the balance sheet and income statement explaining more about what they are. If any of them are unclear, we can go to note 4. So note 4 is on page 21. And this is where we report y'all's receivable balance due from grantee agencies. And we also report the council's open funding commitments. So the open funding commitments, and that's the amount you have encumbered at year end that you're dedicated to spending, to giving out in aid to organizations. As of the year end was about 7.4 million. So a lot of money set to go out. Obviously, not all of that will end up in expenses because not all organizations will spend everything that they're allotted, but that is the money, quote unquote, tied up to go out at your end. Let's see. Note 6 has a lot of FRS disclosures, pages and pages of FRS disclosures. If those interest you, but for our purposes, we'll skip those and we'll move to. Let's go to the next slide. This is note 5.
Yep.
Yeah.
Oh, go ahead.
No, you go first.
No, that's, I want to understand, the $7.4 million. I'm not sure it's up on a slide that I can't see. So that $7.4 million, when you're reporting it on September 30th of 2025, is money that hadn't gone out by September 30th, 2025, but we have dedicated to go out. So that would include the current fiscal year that we're in and any, okay.
Yes, that's correct. Those are all the sum totals of all the contracts you
Got
have
it.
outstanding.
You have commitments on.
Yeah,
Commitment,
Yeah.
and again, there's one would assume, just based on previous years, that there would be also in those commitments, the grantees themselves. It's not a guarantee that they would spend it all.
Right.
In fact,
If
historical.
every grantee spent all their money, then that would be 7.4 million. Yeah. Yeah. Okay, thank you. These are all the long-term liabilities that go in that government-wide balance sheet. You can kind of see the activity in each of them. You'll see in compensated absences, we did implement GASB 101. Didn't result in a huge change, only an addition of about 8,000 in liability. And the rest are mostly the leases and so the IT arrangements that you had booked from previous years getting paid down. And the net pension liability. So that changed by about 156, 157,000. I think they had better than expected investment results this year. So the liability went down across the board and less allocated to y'all as well.
Thank you, Chris Spencer.
We'll see how it does this year, right? Let's go to the next slide. And these are just your capital assets. You don't actually have any like fixed assets that you own. These are all from leases and installment purchases, and you have the copier on there, and you have software that's being amortized. And there were no additions this year. There are no capital purchases this year.
And where does note 7 start?
Sorry, 26. You'll see.
Page 25 is the problem.
Yeah, 25 and 26. And so you'll see an ending net capital assets balance of 396,000 or so there. And the rest of the notes, 8, 9, and 10, just show the future principal and interest cash flows for your leases, your installment purchases, and your software. But that'll do it for the notes then. And that'll do it for the presentation, actually. So thank you very much. Appreciate y'all. Thank you again for a great audit. See you again in about 6 months, I guess. Any other questions? All right. Sounds
Thank you,
good.
guys.
Thanks.
Going back to the agenda. Yes.
We just need to move a recommendation to the larger council.
Okay, if I could get a motion on item 5, which is a recommendation that we bring forward the audit. Oh, we're gonna get this to everybody.
It'll be in the.
We're not gonna drop it on their desk like it was here, so that they have time to look at it. But the motion I'd be looking for is that we bring this forward for the full board's consideration.
So moved, or do you want me to restate
Yeah,
it?
that's perfect.
Yeah.
Yeah, a motion, second, without objection, show that approved, and thank you. Thank you guys very much.
Thank you. Appreciate it.
How many years left did they have on this, what?
One more.
No, we just renewed.
Yeah, wait,
Two more.
2, right, okay.
2 1-year options.
So we'll see you again for another couple of years. That's what I wanted. Thank you all.
What's it, 2026?
Uh,
The 2-year option.
Okay. 8126. A review of the financials, item 6. You want to go through this, Sika? This I did have in advance, so I feel.
Sure.
Well, maybe
it hadn't
this,
changed
maybe
much.
this. Let's do this. With the two, do you have questions on the financials?
I do not.
Okay, I'm gonna save your oxygen.
Change.
I know, I have no questions, so we do need to take a vote on moving them forward with the recommendation for approval to the full council.
Oh, no.
I have a motion and a second, without objection, show that item approved. The next meeting agenda is going to look very similar to this with one exception, and that is the presentation of the audit results will not be on it. But we are going to begin to put together a budget. And so there will be an item that addresses that. Other than that, I don't think that there would be anything else. Are there committee member comments? No committee member comments. I will accept a motion for adjournment. A motion, second without objection, and it's 1:27. We are adjourned.